presentation of TFNN.
Good day, Money Masters and Treasure Hunters. Welcome to the May 8th, terrific Thursday edition of The Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I'll be filling in for Tom this afternoon, and I am grateful for your presence here today. My outcome this evening, well, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when we master the tools of the mind, we become a strategist. Today, you'll hear me use terms like A to B equals CD, or I'll mention swing points. Maybe it'll be Gartley buy, Gartley sell patterns. Heck, I'll even talk about butterfly patterns. And each of these terms are what I call tactical patterns. They help us to project future price levels, and tactics are important. But tactics without strategy, that's a recipe for failure, and failure is not an option in my playbook. So no matter what it is you are trying to master in life, what I want you to do is I want you to think like a strategist, because strategists, they slay the tactician all day long. Now, the foundation of any strategy, it's to have a strong mind. So let's look at one of our tools. This is the tool I call, and it's my favorite tool, it's called Become an Ant. You see, ants live by a four-part belief system, a success philosophy that each of us need to subscribe to and live by. Belief number one, ants never quit. If an ant is headed somewhere and you try to stop it, you know this. It'll find another way. It'll climb over, it'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you're supposed to go. Belief number two, ants they think winter all summer long. Now, it's really important. It's an important perspective because summer does not last forever, and therefore, ants gather their winter food in the middle of summer. Belief number three, ants think summer all winter long. This belief is even more important because during winter, the ants remind themselves, hey, winter won't last long, and on the first warm day, the ants are out. If it turns cold again, well, they dive back down in the earth, and they ready themselves for the next warm day. Yes, folks, they too can't wait to get out and enjoy summer. And finally, belief number four. How much will an ant gather during the summer to prepare for winter? That's right, all they possibly can. This, my friends, this is the way to live. This is the system you need to adopt. Be an ant. Never give up. Always look ahead. Focus on what you want. Stay positive. And most importantly, do all you can do. You've got my commitment to do all that I can do for you for the next 60 minutes. Let's get things kicked off here. We had the Dow finish up 32 points, up 0.2%. It closed out at 16,550. and 97 pennies out there. The S&P down about 3 points, down $2.58, closed out at 1875.63. NASDAQ Composite, a little weak out here. It's been the lead dog. Well, it's been the second lead dog on the way down here. It was down 0.4% off 17 points, closed at 4,050. Russell 2000, that's the weak link in the chain, off 1 full percentage point, down 11 points, closing out at 1097 out here. New York Stock Exchange off 16 points today. It closed out at 10,610. It had net declining issues, 503 out there. That means it failed to turn the oscillators above zero. That says the bears still have control of the New York Stock Exchange. So where are we in the markets? Boy, if you were taking a look at intra-session, just like yesterday, we've had some fairly wild swings. In fact, inside the S&P 500, we went from a low today of 1870 all the way up to a high today of 1889. 1889. How about that? We've had some pretty wide price moves out here. Now, what was really going on? What was today's session really all about? Really a light volume pullback. Just kind of a little bit of a pause out here. From a candlestick standpoint, not really much going on. Let's go switch over and take a look at what we did inside the SPY out here. If we take a look at the SPY doing volume today of 92 million shares. So yesterday we make a lower low. Now this is really important here. Let me step back. We'll draw this butterfly pattern. So there's one of those tactical terms, right? We'll draw a butterfly pattern in here in just a moment. The SPY, it's not so much a SPY. In the case of the SPY could very much be forming. It's going to do one of two things. Should do one of two things. It's either going to go test the highs out here from April the 4th. That price level is 189.70. The volume up there is 169 million. Again, today it was pushing up with 92 million, so pushing up with a little bit lighter volume out here. It's either going to overtake that level, and if it does that and it does it with volume, what it will do is it will go ahead and it will form an A to B equals C to the upside. The A point on this, and this is the lightning bolt pattern, this is where it'll start at that swing point. That's a swing point is nothing more than where you see a major turn in the markets out here, a major shift in change in trend. And therefore, as the low is being made in the SPY on April the 11th, that low is 181.31. We'll start with that as our A point. Our B point is going to be the swing point that came in on April 24th. That high is 188.39. Goes ahead and pulls back, makes a low 2 trading sessions later. That was on April 28th. Gets down to a low of 184.96. So, if in fact the SPYs are able to take out the highs of April 4th, they have not tested it yet. That is where the SPYs want to head to. If they close above the level of 189.70, if they close above it, volume or not, what they will try to do is they'll try to complete that lightning bolt pattern. The 1-to-1, A to B equals C to D would take it to a price level of 192.06. So we've got 2 possible areas for us to be focused on. What would also happen at that 192.06 level is what we would see is we'd see a Fibonacci expansion. That would be an expansion of that same swing point out here. That's the swing point high from April 4th down to the low that came in here on April the 11th. And if we take a look at that 1.272 expansion, that level would be about 191.93. So the target price, maybe it's a spike, maybe it's just simply a close over the swing point. The target area of what the SPYs are trying to do is get somewhere up in that 191.93, 190. Oh, I took out in that 190, 193 type area out here. I can see my A to B equals CD tool kind of shifted there. Let's go take a look at the Qs out here. Let's go see, what has, in essence, led the market down. It is not as weak as the Russell 2000. Let's go take a look at the Qs, and this is really the pattern that I wanted to show you here and that is this, and that the Qs have this very unusual characteristic. And their characteristic, and you go back, you can take a look at all of the stock charts out here, what you'll see is that the Qs will make bottoms. They will make bottoms with high volume sessions out here. And that's really, when we take a look at what's transpired here, ever since the low that was put in, it was called the key reversal session. That was on April the 15th. Ever since that session was put in, that had volume, by the way, of 84 million shares. The next low that came in, the next retracement that came in inside the Qs, that was on April 28th. That low was made with 58 million shares. Heck, in the past, 58 million shares has made some pretty nice lows out here. Market is getting a little bit more volatile, let's say. So we're starting to see some volume pick up. Nonetheless, yesterday was also another high volume low. But what it was doing, you can see we've had 3 high volume lows. And yesterday's low, which was important, it did not take out the low of April the 28th out here. So what do we do today? Well, if you take a look, if you're watching this on Tiger TV, and I hope that you are, you can see a nice descending price channel out here. That descending price channel, price has been traveling in. The Qs were able to bust through that area. They first busted through on April the 24th, but they weren't able to stay out. Now, when you break out of a trend, the way that it works when you take a look at a stock chart out here, when you break a trend or you break a channel, typically price, what you want to see from either the bullish or the bearish side is you want to see price come back and test those levels. And when they come back and they test those levels, if they reject them and they stay out, it tells you that you're likely seeing a change in trend. Well, that was a failure that took place after the Qs broke through that channel line on April the 24th. Nonetheless, Qs broke through it on April the 30th. They have been traveling above, even though they've been trading a little bit lower. They just keep coming back and testing and testing and testing. Even today was a test of that price channel. Now, the volume, the pullback today, light volume, 45 million shares. If yesterday was the beginning of a move down, you would have expected, number one, to see the lows be taken out. Number two, volume accelerate on the way down. We did not see that. What that sets up is the Qs still can make a move. How they're going to do it, I don't know. But they can still make a move up to the $90 level. Now, the cool thing about the $90 level is that the $90 level is going to be a test of the trend line that takes us all the way back into the June 24th, 2013 time period out there. So the Qs had broken through that price channel, that trend line out here. They have not gone back to test it. I suspect that is exactly what the Qs want to do out there. The IWM, that's a whole different story. But here's the deal. Yesterday, if we take a look at candlesticks inside the IWM, and we'll do this when we get back from the break, guess what it formed? A hammer candle. That hammer low was not taken out today. 877-927-6648. We'll be right back, folks.